YouTube, DCAM9 here with another market update. Over the past 3 months, we've seen a lot of moves in the market, and I'm going to break all of those down and what we can expect to see going forward. So, on screen is a snippet from Robinhood's newsletter. If you don't subscribe to the Robinhood newsletter, I highly recommend that you subscribe to it because it has very valuable information, like what we see on the screen here. In this snippet from this email a week ago, they talk about the themes that were defined from January to March. And I thought two of these were really important for us in the market going forward. One, that's Biden's new deal. If it's too long and you don't want to read it, the short is Biden is printing a whole lot of money in regards to stimulus checks and revamping our entire infrastructure. So everything from roads and bridges to elderly homes and all of those types of things. And he wants to spend trillions of dollars in reinvesting into America and making sure that we're America first. And that was a huge deal from January to March, and we're still talking about that now. The second part of this was the swing and bull market. A lot of people think that since he's printing all of this money, we're going to have to pay for it later in some sort of way, and that we're creating a bubble by printing all of this money. And a lot of people are being a little scared with their money and not really fully investing into the market because they think we're in a bubble. So those are the main themes from the first quarter of this year. Let's see. Let's dive deeper into it. So diving into Biden's makeover plan here, as you can see, he wants to spend $621 billion on transportation projects. That's things like bridges, the roads, airports, you name it. And the one key feature that he wants to talk about is electrifying America. And we see a huge push for electric vehicles and electric charging infrastructure. The second part of it is $400 billion for long-term care. Like I said, they're doing facilities for elderly and the disabled. $300 billion for manufacturing. We're trying to become less dependent on China for our manufacturing and starting to put America first here. And we're starting to see strengthening in our manufacturing processes. Then we see another $200 billion for affordable housing and schooling. So it works its way down. And the key thing here is that we want to be able to take advantage of these things. So $600 billion toward transportation, we expect to see all of the companies that will be involved in that type of project to do well. So companies like Home Depot, Lowe's, and Caterpillar, all of the companies that you think of when you think of building, these companies should do well because they're getting this infrastructure spending. Same thing for these long-term care facilities like you see dividend REITs. They should be huge beneficiaries of these grants and federal investments. Boost in manufacturing. We're seeing the chip companies, the semiconductor companies, they've been taking off over the last week or two. Most of those companies are heading to all-time highs right now. And this is due to the shortage that they're seeing right now and the talks about Biden strengthening our supply chain for these companies. And the idea here is that we're going to spend all of this money, but it has to come from somewhere. So the big thing is, are we going to raise taxes in the future? So if we're spending on certain companies and certain companies are going to benefit, but we're going to raise taxes, there's going to be a lag between companies that aren't benefiting but are getting taxed higher. And those are the companies that we want to try to stay away from. So think companies like, like a shoe brand or something. Shoe brands aren't benefiting from Biden's infrastructure plans, but they would definitely not benefit from higher taxes. So we kind of want to steer away from those types of companies and try to go where the money is flowing. So as of right now, there are still talks about that. They're still trying to get these bills and laws and proposals passed. Nothing's set in stone yet, but we want to try to prepare ourselves in case these things do happen. So this is the S&P 500, the top 500 companies in the U.S. stock index. And for the past few months, we've been talking about this megaphone pattern. Looking at the monthly chart, we're going to work our way down, all the way down to the daily. So we were talking about last time we were here, we were talking about how we were at this resistance level, and that if we were going to break out, we want to see a breakout on high volume, and we want to see some good bullish momentum here. So we broke out, we got above it, and for the next 3 months, we kind of had some consolidation, some worry here, because we see some strong seller wicks. We're getting buyers to step in, but we're seeing sellers start to push us back down. And I was kind of worried that we would be able to break back down into the megaphone pattern because the bulls weren't strong enough to keep us above the megaphone top here. But as you can see, in the month of March, we gapped up, we came down, retested the top of the megaphone pattern, and then closed at the high of March. And that's very bullish. That's very bullish price action here. So now we're at the start of a new quarter. We're in April. We're in the first week of April, and we're here already making new all-time highs. So that's very bullish price action, and that's the type of move that we want to see on this breakout of this megaphone pattern. Going down to the weekly time frame, we see exactly what we saw on the monthly time frame. It reiterates the choppiness that we were seeing, and that we were worried here. We came down and retested the top of the megaphone pattern, and now we're off to all-time high. So no real new information here. It just further illustrates the monthly chart. One thing that we do want to take note of is this steady incline here. And going onto the daily chart, we can actually see all the way from November to now, we've been in the channel. We've tested the top of the channel, we've tested the lower ends of the channel, and we've just been range bound. One thing I do want us to pay attention to is that there's the top half of this channel and there's the bottom half of this channel. And in the top half of this channel, we see smaller price movements. We climb, we're taking our time in the top half of the channel. But when we start getting into the bottom half of the channel, we see more volatility creep in as sellers try to push us lower and push us below the lower ends of our channel. You can see definitely here in March where we retested the top trend line. This was right here, this low right here was the retest of the megaphone top. We retested this trend line, but bulls were able to push us back into this channel, and now we're making new all-time highs here. So if this channel is to continue, we should expect to see some sort of resistance or some sort of selling pressure as we get to the top of this channel, and maybe push us back toward the lower end of the top half of the channel. Overall, bullish in nature, no worries here. Next, we have the NASDAQ here. As you can see, we're still in this channel here on the monthly chart. We were able to break out of this channel here, and just like we saw in the S&P 500, we broke out, retested the top of the channel, and then bounced off and went higher. Now for me, I'm looking at these past 3 months, a lot of indecision again. We see a lot of long wicks, indicating that there's no real leader. Bulls aren't in control, the bears aren't in control. It's just moving sideways consolidation. We want to see the bulls step in and get above these highs here and start closing higher. If not, we can see us retest the top of this trend line here, and hopefully this trend line holds. This would be a great buying opportunity here for another leg higher. If not, then we could start to see ourselves fall back to the lower end of this channel. This would be the NASDAQ's megaphone bottom pattern here. Going to the weekly time frame, we see what we saw on the monthly time frame. We broke out of it, started to consolidate, made like a sort of ascending triangle formation here. We broke out and retested the top of that triangle formation, and now we're heading higher. This is textbook. This is exactly what we expect to see as we break out of this pattern. We see high volume to support the move here that says that this was in fact a retest, and the volume fading shows that yes, we are going higher. So we want to see the NASDAQ start to push up to all-time highs here for another bullish move. Going down to the daily, we see the same move that we saw in the S&P 500, where we were in the channel, we broke down out of the channel, support held, and we're bouncing, and now we're making the move in the push to new all-time highs. So keep your eye on this. Keep your eye on a retest of this channel, because that is likely to act as resistance as we climb up higher. So It just so happens that this resistance area coincides with the former all-time high. So keep your eyes on that. Next, we have the Russell. The Russell 2000 is our small cap sector. This sector has been lagging. This sector is made of biotech companies and a bunch of smaller companies here. So they haven't really received the same love over the past few years, especially looking back to the 2008 crash and recovery. They haven't recovered as strong as the tech sector and S&P 500 have. But ever since November, we've been on a tear. And we broke out of our channel when we had the original C19. Now we're breaking back into this channel and we're testing the high of this channel here. So zooming in, we're starting to see that same indecision that we saw on the NASDAQ, where we see really long wicks on the top and bottom. And we're starting to see this on high volume. So this is definitely an area of interest. To stay bullish, we want to continue to climb higher, but I would expect to see us pull back just a little bit, maybe come down and retest the middle trend line here before we can make another push higher. Going down to the weekly time frame, we start to see that we have some buyer wicks here. That's really interesting to see. The bulls are definitely fighting to keep us toward the upper half of this trend line and trying to see if they can push us higher. So that's definitely something to take note of. But no real information here other than these buyer wicks here. Going down to the daily time frame, do we see anything major? No, we're just consolidating in this channel here. We want to buy the breakouts above this channel and close some positions below the lows of this channel here. And lastly, we have the Dow, everyone's favorite. So are we seeing any information different than what we've seen on the Dow? No, this looks very familiar. This looks just like the S&P 500. It's going to be the same story that we've seen on the S&P 500. Megaphone top. We came back, retested it. Just to skip to the daily chart here, we're seeing the same channel that we saw on the S&P 500. We broke out, came back to retest the middle trend line, and now we're bouncing higher. Only difference is we're trading above the range. And this would be considered a breakout here, where we came out, do a retest, and break out higher. We made new all-time highs, so that's really good. To give us some things that are on my watch list here, I have VFC. This is a consumer non-durables. This is from a technical standpoint. We were in a consolidation, ranging market downward, and now we're starting to break above this range here. And we're closing above an important resistance level. So I would watch to see if we get some continuation, maybe a retest of this trend line here to confirm the breakout before another move higher. But just keep this on your watch list for another move higher. Next, we have MDT. I'm watching this as we get higher lows here and a flat top. This is your ascending triangle pattern. Typically, you want to see this breakout, come and retest, and make another push higher. So I will be watching this to break out for all-time highs as well. And another bag here, the SMH. Now, earlier we talked about how the semiconductor sector has been booming because there's a chip shortage and Biden wants to improve the supply chains and get production back to normal here. And you've seen the semiconductor, this is the semiconductor ETF. And you've seen over the past couple days, we've really rallied hard and we're making a push for all-time highs here. I would wait for this name to cool down before jumping in here. We have a lot of gaps to fill. But what's interesting to me is that we have this potential here for a high that was made here. We kind of rounded ourselves out. If I can illustrate this for you. We made a high here. We're kind of rounding ourselves out, and now we're testing this former high. If this high is to break down, we would see something along the lines of this. We want to buy the support here and then watch as it makes another leg higher. This pattern, hopefully you recognize it. This is a cup and handle, so I will be waiting for a pullback before I get into this name and ride it for the next ride higher. So those are on my watch list. I recommend you keep an eye on those. All right, so the last thing for today that we're going to talk about are the key events for this week. On Tuesday, which is today at 10 a.m., the JOLTS job openings is going to come out. This is basically a survey where they estimate the number of job vacancies throughout the current market. And if these numbers are low, that's pretty good. That's a good sign. That means unemployment should be expected to be low. Wednesday, goods and services trade balance. That report comes out on Wednesday at 8:30 a.m. If the U.S. exporting more than they're importing, that's good. That's going to mean that we have a strong dollar. But a strong dollar means a poor stock market because the dollar and the stock market are inverses of each other. So keep your eye on that. Also Wednesday at 2 p.m., the FOMC minutes are coming out where they expect to make an announcement on interest rate changes. As interest rates go up, the stock market also goes down. So keep your eye on that because interest rates make bonds more appealing. People take their money out of the market, put them in the bonds and safer investments. Thursday, initial jobless claims, 8:30 a.m. These claims come out every week, and we want to see these numbers continue to go down. As they go down, the stock market should do better because that means a booming economy. Also Thursday, which is the final major piece of news for the week, Jerome Powell is speaking at 12 p.m. And he's just going to give his economic update, economic outlook. So keep your eye on those. So good luck trading this week. I hope you have a fantastic trading week. Don't forget to like, share, and subscribe. Thank you.